Hey everyone, it's Evan here from the Trade Risk on Saturday, April 16th with a weekend market recap video. We are first going to analyze the current market environment. We're going to look at some other markets, sector analysis, and then finish off with some individual names, no trade ideas in this video. We'll jump right into things. S&P 500 closing higher 1.6% on the week, and the bulls took out resistance at 207 that has been holding for just over a week. So let's look at where we came from. We opened up this week right here on this bar, and you can see it started off with sort of a bearish tone where we closed where we opened higher, closed on the lows, and right up into this 204 support level. We talked about this in our midweek video. This was the chance that the bears had to break this market down this day right here. They had the bulls pinned against the fence with this close on the 204 support. They tried to break us below it. They failed. We saw this big reversal on Tuesday, and we closed at the highs, basically above the prior 3 days action. Then we saw the gap up, and now we're sort of stalling and moving sideways again. So it's not a rip-roaring rally, but still it's behaving well technically. This nice consolidation that got put in, again, creating a lot of doubt, creating some very loud bears in here, some uncertain longs getting out of their positions. That was enough to fuel the gap higher above resistance, and then once again we're just moving sideways again. So the uptrend still remains intact. Notice the bullish aligned moving averages are still there. We're still positive on the NIMO. We're making our way through earnings season. We had financials report this week, or many of the big names at least. Most of those responded very favorably, so the financials were able to participate this week. So there are still a lot of good reasons, both technically and I suppose fundamentally, or at least initially through earnings season, that this market has no desire at this current time to break down and head lower. As much as people may be looking for that reversal point, it's still not surfacing. It's still not materializing. Again, last Tuesday was a chance that the bears missed on. The first line, I suppose, would be getting back below 207. That would create some doubt. Take a look, I'll just bring it up now, at Apple, at what this did. This looks very similar to the S&P 500. So notice it had this gap higher, it moved sideways, and now look at this bar. This is something that's a bit more concerning. Again, technically, it didn't change too much in the big picture. We're still in an uptrend. However, some type of potent 2% down day, although it wouldn't be that big, it wouldn't have to be that big in the S&P 500, someday that would take out that support. Think of this as 207, closing on the lows. That would be something that would say, well, maybe now it's time to get neutral. Maybe it's time to just see what happens here. That's the type of thing you need to see. And if you don't see that yet, then I'd say it's just still time to stick with this trend as much as you may want to fight it or not participate. That's the way we've been playing this. Last weekend recap video we did last Sunday, we were very bullish and optimistic on the market, and it was off to a slow start, but of course we did end up seeing that kind of materialize, and here we are again in a similar situation where nothing much has changed. In fact, we've taken out resistance after a long period of consolidation. Things look pretty good. So let's look at the IWM. Very similar situation here again. Similar start to the week. Had the nice push above resistance. Even more of a breakout bar here with this large body. And then we're holding sideways 2 days in a row, holding the top 75% of this igniting bar's price action. That's extremely healthy. That's textbook 101 kind of consolidation, holding high and tight. That looks great to me. The Qs, similar situation, maybe a little more sloppy, close to this 110.50 breakout or so, but similar idea, above all the fast-moving averages. So all in all, I think the story across the indices kind of tell the same picture here, the same story. And again, don't forget, we are moving through earnings season. You're going to have sector risk. We got technology, a lot of technology, big companies on deck next week. We're going to have to see how this index and those names handle those types of reports. So let's look at some of the other markets. TLT, again, continues its uptrend. Had a nice sort of orderly 5-day pullback, and now it's starting to push higher here, particularly on Friday when it closed up almost 1%. Needs to get back up here, take out this 132.50 level, but you can see at worst here, sideways consolidation. At best, we're still in an uptrend longer term here, and resolve to the upside is what you should expect. USO ran into resistance here after a nice run after this false breakdown around $9, pushed all the way up to the top end of this range, failed here at this prior pivot, not so surprising, and then you can see here at the end of the day on Friday, looking like it wants to try and come up, a little bit of a hanging man there. We'll have to see how this starts next week. Again, I think you're still pretty clearly at least range bound here as the bulls try and maintain some near-term momentum with this bullish aligned fast-moving averages. So let's see if it can hold above $10. I think if it can, put in some type of pivot high or low, push back up and try and challenge this resistance again, that would be constructive for the bulls. UNG, not so much. This one's still just very volatile, battling around, ping-ponging in this range, very comfortably trading from $6.50 to $6.90, $7 or so. So it's got about a 6% range in here. Still figuring out what it wants to do. Very tight, fast-moving averages, and they're curling both up and down. So see what happens here. Still needs more time. Again, you're still holding the thrust off the lows here from March. That's constructive. Now let's see if the bulls can move this higher. I still like this market. I'm not directly participated in it yet, but I'm watching it closely for UNG. Gold is next, and this one still just consolidating sideways. Again, healthy action after a big run that it's had. Of course, if you go to the weekly time frame, you can see all of this prior supply in here. You can see the downtrend line visually that was broken, and you can see why it may be stumbling a bit here. Not the best drawn line, but you get the point. Sort of back testing it earlier this week, last week, and trying to just find its footing. It might need more time. Again, I think in last week's video we discussed this might need a few more weeks of going sideways up here above 115 before it really starts to make another move or potentially rolls back over. So that's sort of the stance there. Silver, much more impressive this week, closed up 5.75%. Go back to the daily chart. You can see, if you remember this Monday then, it was when we got involved in it right here. So we bought that gap higher, and it continued to hold high and tight, fast-moving averages catching up. We're long this market. Again, we were talking about this trade for quite a while. You can see this downtrend line is what we were watching. We got a nice break above it, coming out of this actionable, maybe inverted head and shoulders pattern, whatever you want to call this. So this looks good to us. We're involved in it. We haven't taken any profits yet. We're looking for silver to move higher in the near term. Now, looking at some sector analysis. Actually, before that, take a quick look at the dollar. That did bounce off these levels, this major support that we pointed out last time. Almost got a bullish engulfing bar here, but not quite. So the dollar trying to stabilize here at support. We'll have to see if it can follow it up with another green bullish bar, or will the bears take back control and sort of break us down from this? So keep that one on watch heading into next week. Now, looking at some of the sector analysis, there's still a lot that's working. Materials probably still the standout. These commodity plays still the standout here for the most impressive and biggest gainers where they're seeing rotation. XLB moved sideways, resolved higher from this nice sort of consolidation that it put in here for a couple of weeks actually, and you can see that pushed higher back on Tuesday as well. Right here, it's back to $46, which has been resistance and the highest price has been at since last July. So a very impressive rally here. You can see strong move off the lows after undercutting the October lows. High tight consolidation right underneath resistance, and now it's trying to get going again. That's bullish. It has run a lot, especially some of these individual names underneath here. Some up, some have doubled in just a few months. Keep that in mind. However, momentum, the short squeeze, whatever you want to call it, still to the upside in the material names. Financials, remember, they reported this week. They by and large had some good results. These were some of the big names, and you can see on the weekly chart here, we're starting to resolve higher. We're getting back above the October lows here from 2015. We took out this resistance. Financials do have some momentum in their step right now to the upside. That's helping the markets. Energy continued to push higher as well. Slid a little bit here into the end of the week as crude came off, but you can see we're above this $63 level. That's constructive. Look at the weekly chart. You can see maybe a little bit of a rounded bottom here, cup and handle pattern, if you will, and this is starting to break higher, or at least trying to. A little indecision here on the top. Keep that one on watch. Industrials, they look good. Cyclicals, they look good. So there's a lot of participation here. Discretionary. They look good. So there's a lot of participation across some of these sectors. So just, that's what you want to see if you're bullish on the market. See if it continues heading into next week. Now, looking at some individual names. Apple, we sort of covered this before, right? We had a similar look here like we had in the S&P 500 or the Qs, push above resistance, and then we saw this big thrust lower, breaking some near-term support in Apple. Again, technically, it didn't break anything. We're still in an uptrend. Weekly chart, though, you can see perhaps coming to terms with this trend line. This is roughly the 61.8% retracement from this impulse leg lower. So we talked about all those things. Perhaps it's just a little bit of an overshoot here. It'll have earnings coming up soon, so we'll see what happens with Apple. I'm sure it'll be around this level when it goes into earnings, and that'll be some type of catalyst to move it higher or lower. Google continues its march higher. This one a little more sloppy, but still looks good. Base sideways here for a couple of weeks, starting to push higher, coming into the 780 level, which it stalled at for several weeks back at the end of 2015. So let's see if we can get above there. This was the highest close in Google, all-time high close, weekly close in Google. That's constructive to see. Again, earnings coming up in Google pretty soon. Amazon, this one's been really impressive. We got involved in this back on here. This was Tuesday. We picked this up right at the close here at about 6:01. We rode this higher, took some profits on Thursday for half our position. We're still in Amazon, sort of a nice little earnings run up here, and just really some textbook consolidation here. That's why we got involved in it. So still, this one still looks good to us. Probably be looking to take more profits if this continues higher next week early. Facebook, this one still looks troubling. I know we had this very exciting bar here, but remember we said as long as you're below this trend line, below the support level at 112, that was just still something to be concerned of. And you can see Facebook still looks like it wants to try and roll over here. Still looks a little bit heavy. Again, earnings soon. This can all change, but that's the picture right now. And Twitter, sort of the opposite here. It's trying to get going. Tried to move above this 1760 pivot level that it failed and rolled over at just a couple of weeks ago. If it can get back above there, it can move to the top end of this range. So keep that one on watch as well. So that's what I have for today's video. I hope you enjoyed. If you like the videos, please do subscribe, bottom right hand corner. As always, thanks for watching, and I will catch you guys next time.